Good day, trader. My name is Wasku Smart. So, welcome to Wasku Smart FX YouTube channel. So, today's topic is gold intraday strategy. So, now, what gold intraday strategy is only means like the intradays we will be trading inside, like we will be trading on lower time frame for the gold, but it is basically with a structure patterns of few zones, which means that we are not going to trade on higher time frame. We're only going to trade on lower time frame intraday, which means that everything is circulate inside a day. So which means that I'm only trading in a day, and I must see my take profit or my stop loss in a day. So that is what gold intraday analysis really means. So let's get started. I'm going to list out every particular functions of this strategy, and it's going to be a well detailed strategy. So yeah, I'm just imploring you to put your mind into it and follow me as I'm doing. And I've done some other videos on intraday analysis on gold on my YouTube channel, so you can just check the previous one also. I think it's still the same thing, but I'm just trying to improve things that I have learned in the chart recently also. So I'm going to add it to it. So for advancement of the one I have done before. So let's get started. The classic function for the strategy is the Asian range. We must know our Asian range. We must know the Asian buy stop and the Asian sell stop. um, we must understand our Q zone. So there is only two Q zone that I recommend, which is the London Q zone and the New York Q zone. So the other thing to know, or I should tell you, is that this whole strategy is based or is classified under the topic I was treating on before, which is called the time and price. So which means that the combination of the time and the price is what we are going to make use in working with the intraday and strategy on gold. Now let's get started. My I will start with the Asian range first. So for the Asian range now, this is last week trade, so which is Monday. This is Friday. You can see so I just want to use this as an example so we can get started with it. So now the first thing we need to do is that this 15 minutes, right? We are still going down to the lower time frame, but let's put things up here. So now the first thing you need to do is that when you open the market on the morning, first thing is that put your 12 o'clock a.m. New York time. My chart is actually in New York. You can see it here. I'm actually in New York. So the first thing you want to do is put your demarcate the 12 o'clock, the 12 a.m. New York time. So when you demarcate that, that will be your own starting day. You know this the chart actually started from that's 18. That's the 6 p.m. New York time. That's when the chart started from. But you need to demarcate your 12 a.m. So this is my 12 a.m. here. So I have this thing here open. So this is my open of the day. This here is classified as Asian range. This is an Asian range. All these are traded here is an Asian range. So this is my open of the day. And the London section, the London Q zone started from 2 a.m. New York time to 5 a.m. New York time. So that will be the range in which you will be looking for trade. So that will be the range in which you will be looking for trade. So now let me say this is my 2. So I'll put it as London. So I have everything detailed on my chart already. So I have the 5 a.m. New York time. Yeah. So I'll put it as London Q zone end. So this one is London. So now this is my London Q zone. So now let me put my New York. My New York Q zone start from 8 a.m. New York time to 11 a.m. New York time. So which means that you start from 8 New York time and you will end it at 11. So which means that I only want to trade in that Q zone. Anything outside the Q zone, I am not trading. So that is what this strategy is really all about. So that is what it's all about. You only want to trade in the Q zone. You only want to stay in the Q zone, which means that I'm only staying in that little time frame. So we are going to trade the whole basic structure in 15 minutes. So now let's go to back to 5 minutes and 3 minutes. So I will show you how it works and what we are going to do. Okay, now let me show you this now. Okay, now let me hide the chart so that now this is the chart. I've already hide the chart. So now you can see that this is where the market started from. This the new day start from. The new day start from the 6 p.m. New York time. So for the 6 p.m. New York time here is called the Asian range. So which means that from year to year, I classify them as Asian range because this is where the New York Open started from, the 12 a.m. the new day for new on in the New York time, 12 a.m. New York time, and this is London section 2 a.m. So, but I classify from this place to this place as my Asian range. So this Q zone is where I want to see market trading, and this Q zone is where I want to see market trading. Okay, the strategy is actually very simple, and we are going to classify it ourselves. And the important thing of the strategy is that you need to understand the WH3 question. The WH question, which it is the what, the why, and the when. So you need to understand what are you doing, what are you doing, why are you doing it, and when are you doing it. So the when are you doing it now is the answer I've gave to you, that I said, okay, when is the Q zone, just the Q zone. So you only want to trade in this Q zone. The what are you doing? The what are you doing now is based on what market present to you. So the why now is what I call the major BOS, or I can say the major market structure shift. So which means that there must be a major market structure shift. So the combination of a major market structure shift plus the displacement is what give us the answer to why. So you must understand these three questions before you enter the trade on this strategy. You must understand your what, your why, and your when. So let me show you for the why, because I know that you understand the what. I will actually explain the what. I will show you on the chart, and the why. But the when has been explained already. The when is just the Q zone. So now let me explain the what. So now let's assume that, okay, now let's assume that this is uh this is Asian range, or the Asian range have been presented to us here. We want to do what are we doing, or what are we doing. So we want to see what we are doing. We want to explain that what first. So now when the New York opens, the New York open goes and you consolidate there and you consolidate there. So but when we have the London section comes in, don't forget one thing. London section comes in now, we are anticipating the London section comes in. But we are not just going to be a buyer or a seller based on just London section open. The thing we need to first classify is we have is called the liquidity concept. I explained the liquidity concept in my last video actually. So but I will just do a little recap based on the intraday uh, analysis. So now let's say this is an Asian eye, right? So this will be my Asian eye. I have it detailed on my chart already. So you can see Asian eye. So this is my Asian low. You see, the enjoyment in these strategies is that you don't need what higher time frame is saying. You just need to focus yourself here and be in sound mind. You need to be in sound mind. Don't react to trade. Don't react to the market. Don't just be a reactive trader. You need to stay well and very focused. So we are explaining our words, right. This is what market presented to us when London Q zone want to open. So when we see the London Q zones open, now we see the London Q zone open one, then it goes back. Then the moment London Q zone take out this liquidity, The moment you take out this liquidity, what we want to see now is called the major market structure shift, or you can say the major BOS, the break of market structure. That's what you want to see. That's the only thing you want to see, the major. Because market has taken out liquidity first, the next liquidity of the day is the Asian sec stop. Market took out the Asian buy stop liquidity, then the next one they are focusing on is the Asian sec stop. So now the question, what are you doing? The what are you doing now is saying that okay, market has taken out the liquidity on the Asian buy stop. I want to see market breaking the structure. So when the market breaking the structure, now that's when the why comes in. Why do you want to sell? So why do you want to sell or why do you want to buy? It's based on what market do. So now what market do now is that you know that market has taken out the buy stop, and the two major focus is your buy stop and your sell stop. Those are the two major focus for you, your buy stop and your sell stop. So when market took out one, you wait for market to break up market structure, to break the structure, then you can explain why. So now we wait for our POS now to occur. So now let's say market goes down here. So when market goes down here, one thing you need to focus, or one thing you need to know, is that a BOS has occurred. A BOS has occurred. And this BOS here is called the break of market structure. So which means that what are you doing? What are you doing? The what is that market took out the Asian buy stop. And okay, I want to be a seller because market took out the Asian buy stop. Then you need to wait for why. So the why is that when market took out the Asian buy stop, market break a structure. So when the market break a structure, the break of market structure have explained the why. So now the second thing in why is called the displacement. So the displacement only occur from year to year. So you need to see what market do inside here. Did market move very fast or did market move very slow? So if market move very fast, it shows that the trade is actually going to be a very big seller. So our target is here because there's a liquidity here, there's a liquidity here. Market took out one, the market break a structure. Then you want to see now market retracing. If there is a fair value gap or an order block, and or ultimate trade entry, which is 0.62 Fibonacci level. So market retrace inside it, then and sell to here. So this will be our entry point, then this will be our target. So that is how the intraday analysis work, or the intraday strategy work. You see, everything that we do here is actually inside um the London Q zone. In case it did not happen in London Q zone, then you can wait for the what? The New York Q zone for this same pattern to happen. Don't forget, inside here, inside this displacement of the market, inside the displacement, you need to find three things that I call the POI, or the point of interest for me to be a seller when market break the structure. So that's when the when. No, the when is just the time frame, the Q zone time that we are inside. So that is the two combination of the price and time um, strategy. So which means that this intraday analysis is actually under the price and time. So now, inside this displacement, you only find three things. The number one is the fair value gap. If there is a fair value gap, you enter the fair value gap as your POI. If there is an order block, another block means that there will be a structured and a well-defined block at the top here. So if there's a other block, you can take out, you can use the other block to enter. But the best thing to use is called the ultimate trade entry. So the ultimate trade entry is that just take your Fibonacci, then draw from here, from the up to the down, then 0.62 is your ultimate trade entry. So which means that this is your entry point. Even if there's a fair value gap on top or another block on top, it doesn't matter. Just enter at your 0.62. Market will actually displace down itself. So that is the structural pattern of the intraday analysis or the intraday strategy. So I've already explained to you the what, the what, the why, and the when. So now let's get into the real chart, and then we can see something
Yeah,
else. Let's go. So this is a lower time frame. So this is the time frame we'll be trading with. So for the intraday analysis, for the intraday strategy, the time frame we are going to be using is 5 minutes and 3 minutes. So now this is the chart we draw down from the 15 minutes. So this is the chart we draw down from the 15 minutes. So let's look at this. So this is the Asian buy stop, right? This is the Asian buy stop, right? So we have this as our Asian share stop. So we have this as our Asian share stop. So now, when market open in the morning, the New York open the 12 a.m. So the market, the London Q zone. So when the London Q zone was bullish because it didn't take out the Asian tech stop, so this is not necessary of entering the bullish aspect. So now market goes up and take out the Asian buy stop. So market took out the Asian buy stop here. So now let me draw the box so that we can know that the whole year is called what you call stop hunt. The stop hunt means that market pick the buyer or the people that are bull inside this market. It fakes them, it make them think that okay, after I take out the liquidity, I want to go up again. So you only fake them here so that they will think that okay, market wants to keep buying. So unfortunately, market sold, but this is our own strategy here. Market took out the Asian buy stop. Then you ask yourself, what are you doing? Or what do you want to do inside the market? So, okay, because a market took out the Asian buy stop, then you wait for the next question, which is called the why. So, I want to be a seller because market took out the Asian buy stop. But I need to answer the question, which is called the why. Why am I doing it? Okay, the reason why I'm doing it now is that market comes down again and take out this structure broken here. There's a structure broken here which is called the major BOX. You can see it here, the major BOS. I call it here because that is the major BOS occurs here. So now I have answered the question why. Why should I be a seller? So now market, you can see that it was a very big candlesticks going down that took out the liquidity. So now if I take out my Feb from this up there to this down, so you can see that if I enter this short from this ultimate traded tree down to here, you can see that is 3% profit. I'll be losing 1%, I'll be gaining 3% profit as my RR. So that is what I'm explaining all through the strategy. Is actually very simple and it works very fast on good. It works very, very fast on good. You can see that the strategy actually occurred in London section, but you can see that the strategy become fulfilled in New York section. You can see the New York section, which means that after the London section, the time frame between the London and the New York section is actually called the consolidating time. So which means that you can see the whole market was consolidating until you get to the New York open. Then the New York Q zone open, then it rated himself down and fulfilled our agendas in the cell. So you ask your question, what are you doing, why are you doing it, and when. So the when now is the London Q zone, or unfortunately market enter the New York Q zone for your entry. So now let me show you I show you an example now. So now let's go to Wednesday. This is on Monday. So let's go to Wednesday, and so this is Wednesday here. This is Wednesday here. So let's just fast and put all our chart on. So this is uh New York open. So opens. This is London Q zone open, 2 a.m. New York time. So this is London. So this is London close, 5 o'clock. So the New York open is 8 o'clock New York time, and the New York close is 11 o'clock New York time. So these are the time you only want to trade. Whenever market is out of the time, you are not trading. So the first thing we do here after we open the market trade is that okay, we found out that this low here is called the Asian tech stop, and this high here is called what? The Asian buy stop. So unfortunately, market traded himself up and took out the Asian buy stop. Then I asked myself, what am I doing? I want to be a seller. Then why? Then the why is what I waited for. So when market did not take out the BOS here, there is no break of market structure. You can see it very clearly. No break of market structure occurred here. So market took out the liquidity again during the consolidating time. The market break the structure. Then there's a structure broken here. So the structure that was broken is what answer my question why. So when the structure was broken, uh, actually, I want to be a seller. So I put my, because this is what broke the structure, right? So this is what broke the structure. So I put my Fibonacci levels. So I use my Fibonacci levels. So I use my Fibonacci levels. Um, then I'm getting because there's a kind of there's a displacement here. So, well, I think I make use of this block here because I saw this block as an efficiency block. But let's follow our pattern. So our pattern says that if you enter to the, because there's a block up also. So if you enter to the ultimate trade entry, then you put your stop loss above, then your take profit, yeah, down here. Now the two question comes in. The first question is, what are you doing? I saw market took out the Asian buy stop here. I said I want to be a seller. Then why? I waited for market to break the structure here, but market did not break any structure. Market goes up again, then it broke the upper structure again. Then during the consolidating time in the New York Open, you see this trade actually occurred in the New York. In the New York opened, New York Q zone opened, market broke the structure. The market broke the structure. Then I saw the displacement that occurs here. Then I said, okay, let market comes out to the ultimate trade entry, the OTE, for me to be a seller. Then I saw this block up also. I was like, okay, let market to come here or here. Actually, my stop loss is above here. Then my target is the Asian sex stop. But during the time there, a news occur, and the news is what distributed market down here. So though market go back again and it might take profit. So let me show you the live trade of this trade because I took it, I gave it out to my channel. So let's see it. So this is it here. You can see the trade here. This is the trade here. You can see it here. Asian buy stop, the Asian sex stop. I was looking at the failure swing. I was looking at the after the failure swing. You see the candlestick I was looking at. Yeah, the failure swing. I was looking at the mitigation blocks. So for market, you see when market took out uh the uh the major BOS here. When there's a major BOS here, you can see the displacement that occur. So I was looking for market to come here and be a seller to what? To the Asian sector. You can see how I list out my so I think I'm coming. Okay. So let me show you the end product of it because I think we did no, this was not it. We did it here. Let me show you the end product. So you can see the end product here. Market goes up back and comes into it. So that is the power of intraday analysis or intraday strategy. The intraday strategy is only for people that can stay with charts all day. So which means that you are only staying in chart in the lower time frame, but you have a particular time that you are structured yourself with. So you must not be disturbed. Your heart must not be disturbed. You must always stand yourself. And don't forget, this is just a time and price strategy also. So that's it for today. Thank you. Don't forget to like, share, and subscribe my videos. And you can share to more friends. And if you want to join my Telegram channel, is the link is right below there in the description. Thank you very much. The next video coming out soon. Thank you.